So Bitcoin to trade through 7,500 is the message of this particular YouTube. This has been a brutal sell-off, very capitulative, continuation pattern setup, capitulative, another continuation on a much more micro scale. You'll see it there, setup, and then another capitulation. Rising wedge rally that led to a sell-off. We saw it again, rally, sell-off. There's complexity. These bull sessions never really getting away and giving back 80-90% of what they make. Tightening. You can see this grind line under here. A very tight piece of price action like that. Fails to make a new high, then comes off, goes really quiet in that moment there. If we look at that a little bit more broadly, you can see how the volatility is totally gone, and then it lets go from that point. This was a bigger structure setup, so that's our low 1, our low 2, and our low 3. So it's triggered there, but it's primer triggered probably at this juncture here, where it had a little test and then came back in, hugging the floor before rolling over. The downside about all of this is that there's an implied downside target in this, which is some way away. Well, not so much anymore. 7,545 to be run. So quite likely you're going to trade sub the 7,500 level. The interim level was there, very short break, didn't hold on to much very long here. Volume being reasonably high on these sell-offs. And it's a bear side sell-off to the 7.5. From there, you might get some relief rally. We could go really quite high up. Who knows? The more larger scale view, though, is that Bitcoin's not been itself for a while. And this was a worry. We called a sell-off leg here. This went too high. In other words, it wasn't a tightening, wasn't going to be classical continuation. It went highly expansive, as we feared it might when it went after going this high. We needed it to top out there and tighten up and give us another up leg, but that wasn't forthcoming. And in actual fact, all we've done is we tested the extremities of this falling wedge. We went out of it and we came back in, and we're spilling back down. And if you have a look since the highs, and in fact we should probably throw a fib from before the melt up, just to give some context here. Essentially, that was the last real tangible low at 5,000. People have forgotten how much has been done in getting to 20,000, which had just missed by a couple of peas in a pod. And you're in the ground floor here. You're in the ground floor of the red zone. This rally never really got much past 38.2% at any point. Couldn't hold above the 11.5 and is selling back down. It's quite feasible you get a continuation strategy setup, and we continue downside. It's not a positive message, I'm aware of that, but these melt up highly explosive up days that sort of emanated from the last and final dip here at about 5.4. This was a complete blow-off moment. This is like a shooting star. So if you made one candle out of this whole ice cream flavored area, essentially you'd have a low wick here, and you'll have a small little body, and then this massive tall wick to the upside, which has all been given background. So it was a complete ramp, melt up, and fail. And now there's a lot of people with a hangover, and it's taking a lot more to shake off. People forget how good the good times rolled. 10x in 1 year, you know, right the way from the beginning of the year, and you got a 10,000, and now everybody's forgetting that you started 2017 down here. There is plenty scope for downside and blow off moments that could take you way lower than you want to know about right now. This downside continuation, as I've suggested, 7,545, beginning of the year, just getting back to the beginning of the year, which of 17, yeah, is miles away. You're talking about $800, $900, depending when in January you take it. I'm not saying it has to give back the entire 10x that it did for last year, but it's certainly quite feasible that it gives back a large part thereof. This is a highly volatile instrument, and the move was huge. People don't understand. Things don't start at 700 $150 in a year and finish at 19,000 in December. Admittedly, the back end of December it started already, the give back. But just from this last blow off, this is a lot that can be given away. If we took the entire year, and I don't see any point in that because calendar years are only significant to humans, but if we took the entire year and dropped it right the way down until we get to January of 2017, if we do that, you will see that this has plenty of scope for downside from the 6th of Jan. And in fact, we're only just at the 38.2% level of a give back. So, it helps to have a look at your super macro charts. Those 10x's don't come for free. And what we're having is a pretty ugly sell-off. I don't think it's going back to, don't get me wrong, I don't think it's going back to beginning of the year of 2017. I'm just trying to make the point that there is scope for further downside. I'm concerned about this level. I think if we get a down low somewhere here and then we rally again, this will be continuation. And that can certainly point to 2.5s and 3,000s, if not all the way down to the 700s levels. So that's a scary proposition for a lot of people. Big pump, big sell-off, highly speculative market, highly volatile, and now people are feeling the volatility cuts both ways. And they wanted the bear market to be over when they wanted it to be over, and the first bounce, I'm afraid, is not the revised bull. Once again, if we just take the fib level just from the high, just from that high point to the low, you have that bounce did just make the 38.2 and couldn't hold there for very, very long, and is straight the way back into this red zone again. So this is not bull recovery. This is not a bull market. This is not a recovery bull market on the daily time frame. On the daily time frame, you have made a low, you've made and lower lows, a series of lower lows and lower highs. Let's call a spade a spade. Let's call it a shovel. There's your high, there's your low. Lower low, lower high, my apologies, up top here, then that high. Lower low, lower high, lower low. And then you made again a lower high, and you could still again make a lower low. This is a bear market on the daily time frame. It's taken me a bit long to snap out of it and expecting things to get a quick recovery, and we get swung into our belief systems. And we think, wow, it's got to go back to doing what it was doing recently. It doesn't have to do anything. It can do 10x in 1 year and take 60% of it back in the following year, just because it can, and that's volatility. So if we just take a snapshot of that, this is the point we're making. We haven't truly escaped what is essentially a bear market until you've made a higher high and a higher low. And this is what we've got so far in real bold. So I'm going to make this super sized just so that there's no doubt about it and everybody can see this arrow. That is your sell-off. That is your rally. Yes. Now that is a lower high followed by a lower low. That is a lower high followed by a lower low. This is an attempt to make a higher high that tried twice, failed, and turned back. So this, at the very best, is a churn period after failing to make a higher high. After failing to make a higher high, it needed that level. This is the level it needed to make a higher high, and it failed. That was the level the previous one needed to make and failed. These are the lows that keep being run. So for now, we have failed to make a higher high, and it's now a question of, if we come down to this level, will we create a wind-up continuation pattern? In other words, something like this, and I'm going to change the color again to the gray and make it a little bit less ridiculous large. Are we going to get some form of continuation pattern like that, whereby we will break on balance of probabilities, bad news, to the downside? On balance of probabilities to the downside, if we do something like this continuation. The alternative is The bull alternative is, because this sure ain't a bearish and a bullish scenario, is that we come very close to this low and we form a double bottom, and then you have the possibility. Note I say the possibility, it all remains to be done. So let's do this in green because it's slightly better news. We have a scenario where that is green and you come back up to this level here. You come back up to that level there, and that is a neckline. Then you can have a little dip and you can smash and break. That breakout there would be a takeout of that high after failing to make a new low, and you would have a higher high and a new low by Charles Dow theory. So that would be the double bottom scenario in the greens. That would still require further depth to be plumbed. The alternative is we go into the squeeze, and instead of breaking down, it turns into a first setup in a new trend, which would not be the high probability option, but sometimes occurs. In other words, the trend is deemed over and has run at selling, and then you get a bullish break. That, when it crossed this level again, would then mean that we have a newer high, and that low is a higher low, which would mean also beginning of the end of the bear. So for now, we are still in the bear and we're deciding what to do next. Will we form continuation to the downside, or a first setup in a new trend, or a double bottom which will give you upside, or will we just trade lower and continue to spill, making a series, an ongoing series of lower highs and lower lows? That's the state of BTC. It's taken me a while to see it, but you know, this sell-off post this just shows that there's a lot of scared money still needing to get out, and that this was absolutely the big warning sign. The melt up is always the warning sign, and that was a huge melt up in terms of volatility and amount traveled in a day. Those two candles, I mean, from that candle over there, you were around $11,000 by the time that you were over. You were almost at 17. You're at 11 to 16,800. You're talking about in two candles. That's right, daily candles. In two daily candles, you went from in and around 11,300 to just about 16,800. 11.3 to 6.8, 16.8. So that is $5,300 in 2 days traveled, and you expect that to end well on the downside. It doesn't. It doesn't. So here's where we're at. That's what these are the scenarios for us, but this sell-off is brutal, and there's a threat to this real low that was a temporary low on a target of an inverted HVF that was made. So yes, you got the relief rally, but that doesn't mean it's over. You made that target down there. That's Francis giving you the update on the bigger time frame, while we're also watching the smaller structure. Don't go panic sell this very second necessarily, but I can certainly say we've got a smaller structure for 7,545 that looks like it's got to play out as well, which hasn't got too much further to go. In actual fact, we're now sub $8,000. So we are now sub $8,000 literally while this YouTube was being recorded. Okay. Speak to you all soon. Play safe. Remember, the season will change, but you got to save your ammo, and you can't be cleaned out in the process, and that's the nature of the game. You want to find out more about becoming part of our community and getting these heads up earlier, and being part of our strategizing, our method, learning how to implement. Pop over to themarketsniper.com and getting started there, and you will be able to get an offer from us at our next webinar, which is free. 7 great mistakes traders make with the 3 great gifts, plus an offer at the end. 29th of March, 19:30 GMT. Go to the website and register there. Speak to you all soon. Trade safe, trade small. Bye.